Good evening, Manoj. How are you?
I'm good, Mukund. How are you?
How was the week? This was a rocking week, totally unexpected but beautiful.
Absolutely unexpected. There's a learning for everyone every day that when we enter the market, especially these kind of markets. I mean, it was absolutely unexpected. I did have some longs before it all started, but this was completely, out of place. I did not expect it to rally so much. Of course, I carried short in the end, I mean, yesterday as well as today, but I don't know if I'll be safe tomorrow.
Yeah, no, this was a completely unexpected 5 consecutive days. Every day was a higher high, higher low. So that was good. We're
Yeah.
still in the channel. I think when I was looking at the long-term charts, weekly charts, we're
Mhm.
still in the channel. It looks good, but it's always good to be cautious at this time.
Absolutely.
Awesome. Okay, so we had earnings from last week. Just to give you context, first one was I wanted to talk about was Arista Networks. Arista Networks is a networking company, 1.5 billion in revenue, 28% growth year over year, and an earnings per share beat as well. Stock moving up. I mean, this was diluted earnings per share was 178 a share, up 50% year over year. Very, very solid earnings. Arista looks actually very, very nice. I was very happy with how the earnings turned out.
Mhm. Interesting.
Arista was good. Yeah, still within the channel, now breaking out at the high end of the channel. It looks good. I like Arista Networks quite a bit. Then the second company that we had tracking was SOFI, a big favorite of a lot of people,
Yeah.
550 million in revenue, which was 26% year over year growth. And then diluted EPS of negative 28 cents a share. Still looking good, but I'm still a little bit concerned about this stock. It's a good long-term stock, but there's a lot of challenges yet. With higher interest rates, this is going to be a challenging stock.
Mm.
AMD was another one that had earnings this week. AMD reported 5.8 billion, up 4% year over year. Their forecast wasn't very, very good. Their EPS was about 18 cents, but the stock was down a little bit after the earnings release, and the next day it rallied up from 100 and wherever 98 to like 105 and then 112. It's gone up very well today.
Yeah, surprising to be honest. In fact, I was tracking it closely, and it is one of the stocks to be watched in my list for the week.
Yeah, so this was a $92 stock on the end of the day, Friday or Thursday,
Yep,
sorry, and it's now 112, breaking out,
Thursday.
10% move. That was AMD, and
Yep.
then Roku was another stock that had very, very good earnings
Mind-boggling stock, that is mind-boggling.
and a very good move after earnings. 900
30%
million,
is something.
900
30% is
million
something.
in
Yep.
revenue, up
Yep.
20% almost year over year. They didn't have EPS to speak of. They had lost about $300 million, but very strong move, man. 22% move after earnings.
Yeah. This is
Uh,
surprising to me because I was actually short and I had covered quite a few of my shorts. I was just holding some shorts on Roku, but then earnings definitely surprised me.
Palantir, another strong earnings, beat their top line revenue estimates by 25%. They
Wow.
had a very, very strong move up. So I think I like where Palantir ended up as well. Another
Mhm.
company that reported was Shopify, another stock that just seemed to have a huge gap. Look at that gap up after
Yeah,
earnings.
yeah,
Solid gap up.
absolutely.
Shopify reported 1.69 billion in revenue last quarter. This quarter, they beat again nearly 1.89 billion in revenue. Solid movement. Really, really good. I like
Mm.
Shopify. And then
This
the
entire
last
week
I
itself,
will
actually, just to ask you, Mukund, most of the earnings have been quite surprising on the positive side. So, what did you take in terms of the earnings from all the earnings that have been reported so far?
67% beat earnings and the rest 33% missed earnings. So this is not a clear everybody beating type of a situation on the S&P 500, but according to
Mm-hmm.
FactSet. So it is a little bit better than a year ago,
Mm-hmm.
but not better than last quarter.
Interesting.
And almost 23% of companies issuing lower guidance for next quarter and next year.
And yet, markets are rallying as if stocks have beaten earnings by quite a few margins. So I'm just really surprised. Possibly it is because the stocks and markets were very beaten down, and hence even slight a bit of surprise, and then markets are rallying.
Yeah. The last one was Apple. Apple had very, very good earnings as well, 89 billion. down 1% year over year. When I say good, it's all relative, right? What was expected was a little bit okay. So they did okay. And then diluted earnings per share of about $1.46. Not bad. I don't think it was terrific, but it was not bad either.
Right.
So those were the big earnings. DraftKings was another company that had good earnings. So overall, it was good. The company I was watching last week long was Decker, DECK was the ticker symbol, up about 7.5% for the week. So did pretty well.
Interesting. So
Okay,
let's take a
go
look
to
at
the
how markets are.
major indices, see what the market did.
Sure. Here we go with the indices. Let me bring the SPY first, and then we move to all the other indices. Okay, let's bring back the cup and handle first. And what exactly it is showing. It is the pattern still holds, as I said last time as well. Channels keep expanding till it does not. As of now, it is expanding and it is holding the channel. But the way this week's candle moved up is completely, deceived what I was, assuming. I thought, it will maybe a very small inside candle compared to last week. But this move was absolutely mind-boggling, and I did not expect this last 2 days move. I mean, up to here, I was okay till it was up to 200 MA. I said it's a back test of the 200 MA. But then the announcement on Thursday and then Friday, it was completely, a surprise. I mean, of course, many people do know, but still, just to remind everyone again, technical analysis does work, but we cannot completely overlook fundamentals and macroeconomic factors that are shaping up in the market. QRA announcement was a very, very, very big thing. That is the reason why markets rallied on Wednesday and then Thursday, and then on Friday the NFP data. And hence, even if you have technical shorts or long, do not overlook what's happening out there in the macroeconomic front as well as the fundamentals front. Earnings as well as the announcement from the QRA point of view, it's all that was needed in when markets were completely over, especially from the small cap perspective as well as industrial perspective. The industrial stocks and small caps were way too oversold, and hence it had to be bought, which I had actually also already tweeted on starting Wednesday or Thursday that it needs to be bought into. I did not expect this kind of a move, and hence I had actually shorted yesterday, and I've carried some short today as well. But I don't know if I would be safe. And hence, I would actually watch out myself, my back very clearly. And if my stops get it, I would move on. I would not carry my shorts for a very long time. From the technical perspective, it is at the 50 MA, one thing. Secondly, it is exactly at the resistance of the breakdown, which it broke down a couple of weeks ago. So I would be, I have my, shorts in place, but with a very clear mindset that, it should not close above the 50 MA on the daily. At the same time, the weekly as well, it's just under the 50 MA. So my shorts are as of now safe, but this such a big weekly candle is a sign that probably next week itself, maybe Monday, Tuesday, it will consolidate a bit because we have been rallying for last 3 to 4 days. So Monday, Tuesday might consolidate, but I don't know if it would want to stay there and it would not want to rally, because this channel itself tells me that it is actually a positive channel. So it's a bull flag. So I would be watching all my shorts very, very closely. Any signs of bullishness or any signs of crossing past the 50 MN, I would move out. I would book out. It's okay to book loss, but it's not okay to keep carrying your losses. So although I'm short, but I will not be carrying my shorts for a very long time. Maybe Monday, Tuesday, I will book out. That's on the ES.
Overall, when you look at all of the indices, right, it has been very choppy since August, as you can see, and you can see, but still, if you still look at this channel, it's still lower lows and lower highs.
It is still. I mean, on the even if
lower lows and lower highs.
forget about the weekly chart, look at the daily chart. It has still not been able to make another high above the earlier lower high. So unless it is crosses past and makes above 4425, 4427, bulls are still not safe. There could be some bad news, then all of a sudden market crashes. So you never know, because that's what the sign of a bear market is. Bear markets are volatile. One day it's a negative, another day it's very positive. So you definitely do not know how long markets would hold on to, especially in the long term, especially the kind of macro scenario we are in. Even if the NFP data was bad, markets rally, varied markets rally on the hopes that the Fed would pause. Fed definitely did pause. We all already know that Fed paused. But Fed pausing, is it a good news? Because job losses is a sign of recession. Chances are maybe in the next quarter we might see a recession. If that's the thing markets want to look at, then probably Monday, Tuesday after onwards it might want to fall again. So watch macroeconomic scenario. At the same time, do not be complacent of carrying your longs or short. Make money, move out, and take a look at the charts next day, next to the chart. You don't know what's going to happen. So do not go with the preconceived bias that this is what market is going to do. We do not know what markets are going to do unless and until we see what markets are doing.
We talked about the S&P and the Dow. I'm sorry, S&P and the Nasdaq, but the Dow is a little bit of a different chart, and the Russell 2000 actually had a strong week. I mean, exceptionally strong week.
So let's talk about Dow Jones and so first let's talk about Russell 2000. So I had tweeted about this, I think yesterday or day before yesterday.
That is one hell of a reversal.
I'm sorry.
I think that is one hell of a reversal.
Absolutely.
But
and
still,
it should have been expected. I think we were talking about it last week as well. And I had tweeted very vehemently 2 or 3 days ago that please do not be aggressively short on that in chances. In fact, I had tweeted that I am buying. Why am I buying? Because I was very clear this vertical drop cannot continue. It has to reverse and reverse big time. All the shorts will run for the cover. They have to cover because look at, I mean, what from 2000 to 1600, 400 points. That's like 20% in no time. That's not how functional markets do not behave this way. So it has to reverse sometime, and it had to reverse. And that's what market did. I mean, I am not carrying my longs. I booked out my shorts, I think, quite early because it was FOMC, and I do not trade events. Whether it is earnings, whether it is FOMC, I do not trade. So I booked out my longs before FOMC, but I knew that it is going to rally. But what the rule is, the rule. You trade your plan. You don't change your plan based on what your charts are saying, because charts can change like this.
Yeah.
But I mean, given the place we are, I don't think that you should be long here right now. Wait for the markets to consolidate. Maybe next couple of days will be a day of consolidation. Whether it wants to reverse or no, I don't know. But definitely consolidation, maybe 50, 70 points kind of a reversal from here could be given.
Yeah. How about the Dow?
So let me show you the 4-hour charts and why I was long on the 4-hour charts.
Look at that. That's a beautiful reversal. It's just blowing past everything.
So I was long based on this head and shoulder, inverse head and shoulder. Why shouldn't you be? I mean, it was very clear. I was, of course, long here, and I booked out somewhere around here. Why? Because definitely there are certain kind of resistances which I give pointing out that it should be booked out. So 33.6 and 33.500 is where I booked out. I left 7 points on the table because I did not expect such a massive move. Even if I booked out at 33.500, it rallied past all the resistances and where are we right now? Even on the daily chart, it's right at the 50 MA and above 200 MA. Yes, it has not closed above the last lower high. So that's a second sign of bullishness for the bulls should look forward to. If it crosses past and makes another high, that's a sign that definitely this rally has lags. We don't know whether it wants to do or not, because this 5 days of vertical rally may not sustain for a long time. It needs consolidation. And you look at the 4-hour RSI, massively overbought. Oh, you wow. You do not want to hold your long based on where we are right now.
Yeah, that is
and negatively diverge RSI as well as MACD on the hourly chart. I definitely would not be carrying my longs. Even if I want to go long, I will wait for the markets to consolidate or maybe give up some of the gains and then try to look for the longs. But this is not the place to go long. Definitely not.
Okay, how are we doing on the 10-year treasuries?
We did not talk about
very nice. There was a very nice comment. I wouldn't say dovish, not even hawkish from the Fed this week.
So this is Nasdaq. First, we did not talk about it. Similar chart. There is not much to not talk about. But the plus one, it has crossed above 20 and 50 MA on the daily. The only thing is it is below on the weekly, just right at the 20 MA on the weekly chart. So that's the only thing. But given such a big massive candle, unless something definitely drastically changes on the macroeconomic point of view, I think markets would want to rally from here. There is a reason why I'm little bullish on the tech chart, on the technology space, is because of few of the stocks. Here is AMD.
Yeah.
Big breakout. Here is Apple. On the verge of a breakout. Give me 1 second. Let me just change the colors of this trend line so that people can see. On the verge of a breakout. And look at Microsoft.
Apple
Exactly what? I'm sorry, what?
surprised me a lot.
Apple, yeah. It
Without
was earnings.
event.
Markets reacted initially negatively, but then it just recovered everything. And look at Microsoft, another cup and handle pattern. So if such big names are showing a pattern which is positive, which is bullish, then definitely you want to be careful on your shorts if you have shorts. And if you do not have shorts, do not play with the fire is what my suggestion is. Let markets to decide. Chances are this might fail. So this is already broken out. It's a broken out chart. So chances are it might fail because we have seen failures in the market. If it wants to fail, it will, it will just fall off this particular trend line within the next 2-3 days. But if it doesn't fall and if it continues to rally and it reaches maybe around 365, who knows? So that's the sign that it wants to go higher and higher. So you want to be really careful of your shorts at this point. If some of those key stocks and Nasdaq itself is on the verge of a breakout, you do not want to be heavily short. That's my suggestion, unless something drastically happens. So yep.
Absolutely.
Now about 10-year. Where is it? Here we go. Big reversal.
Look at that. It's gone from the nearly 5% to 4.5%.
Absolutely. That's a big, almost 10% kind of a correction from the top. And that's a massive correction, especially after the FOMC. So, and not just after FOMC, in fact, 1 day before that, there was QRA announcement. QRA changed everything. It was moving away from long end to the short end. That is the reason why long end corrected so much. 10 years, 30 years, both the yields corrected quite a bit just after the announcement of the QRA. And that is what we are seeing. We were actually seeing the 10-year picking out for the last couple of weeks. We have been talking about it, and it gave us exactly the kind of reversal that we were looking for, which is the healthy sign for the markets, because when 10-year yields, 30-year yields do not go up, which means government is able to borrow at a lower rates, which means tech stocks should be favored in the next couple of weeks at least. So keep an eye on out there. Next is crude oil. There you go. Breakdown of head and shoulders, breakdown of the channel as well. So I had tweeted about this last week. It had broken down of the head and shoulders on the 4-hour chart. At the same time, it is broken down of the daily chart of the channel as well. So, I mean, stocks rallying, crude falling, that's a sign that market wants to, look forward in terms of next few. So in terms of the economic recession, that's something that we will see when it happens, because normally crude picking out, and during the time of the recession, especially yield picking out, that's a sign that recession is around the corner. We haven't seen any of those kind of things because my stocks are still running. But given the news around the recession that which economists keep talking about, that is the reason that crude is falling, is my assumption. So probably at least up to 200 MA and this low double bottom kind of a thing, 77, 78 is where I would try to cover my shorts if I had one.
Yeah, I've not been trading oil, so I don't know enough about
I have
this.
been trading it via futures as well as via USO, which is an oil fund. So even if you track USO, it is tracking exactly similar pattern of crude oil. So here it is.
Yeah.
I'm carrying a USO puts, by the way, just for the viewers.
Okay, so we have a few earnings coming up next week. The most important of which, obviously, a lot of people are going to be following is Uber, but the other ones are Datadog, Rivian, Upstart. Upstart has a big following. Disney is a huge one. HubSpot, Duolingo, and DDD. Those are the ones that are coming up next week. There are lots of stocks, but if you look at Uber, Manoj, it has always been mentioned as a great stock. to follow for a year. I've not seen it do anything except go a little bit up, a little bit down, a little bit up. It's like a trending pattern.
It has been in that range of your 30 and 40 for quite a long time. I mean, I haven't seen it, performing greatly. I mean, of course, during the COVID period, it did rally quite a few times, but after that, it just petered off. And then after that, it's been here. So I don't know whether why would people want to, trade the stock based on charts, because it doesn't look any bullish or bearish to me as of now. Only thing which is bullish is the weekly candle and crossing and staying above the 20 mm. But apart from that, it doesn't look bullish to me.
Yeah, it seems to be in a channel, but yeah, I do the same channel. I was like, yeah, it seems okay, but I'm not interested. But anyway, earnings next week. I wouldn't trade it before that.
Right.
It's an interesting stock. I don't want to go through upstart. It's a very lightning rod kind of stock. So I'm going to leave that out. But Disney, given how negative the stock was after last quarter earnings, is coming up this time around again, and it's still not anything great.
Okay, we talked about it quite a few times, and about 3 or 4 weeks ago, I said that I had entered into longs and not carrying shorts anymore. And the rationale I had explained very clearly that it is the falling wedge which is on the verge of a breakout. This was somewhere around here or maybe here is when we talked about it is on the verge of breakout. It did not break out. It tried attempting, which was a couple of weeks ago, and then fell down again, and then again it has broken out. So on the daily chart, it has already broken out of this falling wedge, and it's a weekly chart breakout. I would just wait for this green trend line, which is around 86.30, 86.40, which I would wait for the crossing pass, which is making another higher high above the lower high which made last time. Once it crosses past this, that's second sign and the confirmation thing for me to enter into the stock, maybe enter aggressively. So I would enter my longs once it crosses past 86.
And the moving averages are still flat to going down. I don't see them going up yet. So I'm not convinced that there's a lot of momentum in the stock. Look at the volume on the stock as well. I've been looking at the volume on the stock, and it's slower than before, man. It's not.
Let me see. I haven't ever tracked volume.
It's not super terrific volume. Just look at that. It's like it's not the best.
Average volume. Lower than average, actually.
All right, awesome. That's where we are. I'm watching Netflix next week. I'm expecting a good move from the stock. Had a very nice after.
It has already broken out. So yeah, I understand why you are tracking it and why you shouldn't be bullish.
I got it in the 400 range. I think I'm going to keep it for at least. I know in the short term for me, 440 will be a good range. 10% gain, week and a half. Take it and move on.
440, yes, it is good, and I think maybe somewhere around here, 452 kind of a thing where it should try and give a back test, but till then it's safe.
And I don't mind, and if it reverses on Monday, Tuesday, I don't mind going out of the stock. I've got a 7%, 8% gain. Why take a risk?
Yeah, absolutely. I understand that.
Awesome. That is it from my side. You had a couple of stocks. You're watching Unity, AMD, Apple, and Microsoft. We talked about Apple and Microsoft. We didn't talk much about AMD. Do you want to go through AMD and Unity?
So Unity, I've already brought it here. It's the reason I'm keeping an eye on this is because it is rallying from this clear support, which is around 24, 25. And then it has crossed past 20 moving average and now on the verge of breakout of this falling wedge. The reason I'm keeping an eye on this is because so what happens is whenever large caps rally and small caps participate in a big way, stocks which are high beta, something like Unity and all those stocks, this kind of stocks participate big time. And they do not wait for such breakout. They just break out. So earnings is next week. I wouldn't be surprised that it opens with a gap up. This is usually the case with such euphoric markets and such euphoric movements. So, although it is not a euphoria market, we are rallying from the oversold kind of stages. But last 2 days movement, leaves something for people to, cling on to or to move on to. And this kind of stocks, high beta names like Unity and other stocks, they definitely give high breakout. They break out and then fizzle out. So that is the reason I'm keeping an eye on it. Chances are it will just break out on the earning itself or maybe before that, and then kind of somewhere around 200 mm, which is 33, 34, is where it should start reversing again. And this is another supply zone as well. 33 is the supply zone too. So
There's quite a
33,
bit of supply
34.
even in there's quite a bit of supply even in 31.
Yes. So 31 to 33 range is where you should be careful about. So 33 is also 50 MA, 33 is 200 MA, and then earnings. So I would actually enter now and then book out as soon as maybe before earnings. If it gives me 5%, 10% move, I should be out.
Awesome. That was our list. We have AMD left. AMD was a surprising stock. I expected it to go down after earnings, but hey, look at that beautiful per hour earnings gap. Very,
Absolutely, and it is broken out, and I think it should give some more. It has some more steam. Maybe 119, 122 is what it should do, and then from there it might give a back test. So I would be bullish for the next 5% kind of a move.
Thank you very much, Manoj.
Thank you, Bukul, and thank you everyone. Thank you for those comments and people having. I don't know what's the name of the
that I
CM
think
friend.
somebody asked for, right? Was it AMD?
I'm sorry.
So we are going to do midweek. This week we were not
Yes.
able to do it.
Yeah.
I'm tending towards midweek review of US, but I think it may not be a bad idea to do an India because there are a few people, but we don't have a lot of subscribers in India. That's why I think I was not very interested in India. But
We can
let's
definitely get some because I think once we start, maybe subscribers will start pouring in.
let's start next week with midweek review of US markets, and then we'll
Sure.
see.
Sure, definitely.
Thank you, Manoj. Bye.
All right. Bye-bye. Take care.